Pump and dump. So let's say you're a billionaire and you spot some random penny stock company. Maybe they make electric toothbrushes or something equally ridiculous. You quietly buy a massive position early, then you start the hype machine. You call up your buddy at CNBC, drop a casual, "Hey, have you heard about this revolutionary oral care technology?" You tweet something cryptic like, "The future of dental hygiene is here," and watch your 50 million followers lose their minds. Maybe you get photographed using their product at a charity event. Suddenly, everyone thinks you're the next Warren Buffett of toothbrushes. The stock price triples in a week. Regular investors pile in, thinking they've discovered the next Tesla. Then you quietly dump your entire position through multiple trading firms over a few days. By the time the dust settles, you've made $200 million, and everyone else is left holding shares in a company that makes vibrating toothbrushes. The beautiful part? You never technically lied. You just expressed enthusiasm. And if anyone asks, you'll say you're a long-term investor who believes in the company's vision, even though you sold everything. Even Enron executives pulled off a version of this scheme, with 29 executives selling overvalued stock for more than $1 billion before the company went bankrupt. Dark pools. Now, let's say you want to buy $500 million worth of Apple stock. If you did this on regular exchanges, everyone would see those massive buy orders hitting the market. The price would spike before you could complete your purchase, and you'd end up paying way more than you wanted. But in a dark pool, you can accumulate that entire position without anyone knowing. No price impact, no transparency, no fairness. You're essentially trading in a completely separate market that only you and other mega wealthy investors can access. The craziest part is that regular investors think they're seeing the real market on their trading apps, but they're actually only seeing half the picture. You're making moves in the shadows, and they have no idea you're even there. As of 2025, over half of all trading in US stocks happens in dark pools. These private exchanges are run by major banks like Goldman Sachs, Morgan Stanley, and Credit Suisse's Crossfinder. They're completely legal and regulated by the SEC, but they're essentially a parallel market where billionaires trade in complete secrecy. Stock buybacks. You own shares in a company, and instead of the company investing in research or paying workers better, you pressure them to buy back their own shares. It's basically legal market manipulation that was actually illegal until 1982, when Reagan's SEC gave it the green light. The company uses its cash to purchase its own stock, which reduces the number of shares available and artificially inflates the price. Your shares become worth more, not because the company is actually more valuable, but because there are fewer shares floating around. The best part? If you're a CEO or board member, a huge chunk of your compensation probably comes from stock-based pay, so you're literally voting to make yourself richer with company money. Apple is the absolute king of this game. Between 2013 and 2023, they spent about $600 billion repurchasing their own shares. In 2024, they announced the largest stock buyback in US history, $110 billion. That's more than the GDP of most countries. Media control. As a billionaire, you've got something regular investors will never have: the ability to move markets with your words. You want to buy more Tesla stock? Go on CNBC and casually mention how electric vehicles are obviously the future, and watch the stock pop 5%. You want to short some pharmaceutical company? Tweet about how drug prices are out of control and watch their shares tank. The media treats everything you say as gospel because, well, you're rich, so you must be smart, right? Regular investors hang on your every word, trying to decode your cryptic tweets like they're ancient prophecies. In August 2018, Musk tweeted, "Am considering taking Tesla private at $420. Funding secured." Tesla's stock jumped over 6% that day, causing massive market disruption. The problem? Musk hadn't actually secured funding or discussed specific deal terms with anyone. The SEC charged him with securities fraud, and he paid a $20 million fine. But he probably made way more than $20 million from that tweet. Short and distort. Now, sometimes you don't want the stock to go up, you want it to crash. That's where short and distort comes in. Here's how you do it. First, you build a massive short position. Then you start the negative publicity campaign. You use your media connections to plant negative stories. The stock price plummets as investors panic. You buy back the shares at the lower price, return them to whoever you borrowed from, and pocket the difference. The genius is that you're not technically spreading lies, you're just highlighting concerns and asking tough questions. By the time anyone realizes what happened, you've already made your money and moved on to the next target. Insider access. One of the best perks of being a billionaire is access. You don't just read about deals in the newspaper, you help structure them. You're invited to private meetings, exclusive conferences, and closed-door discussions that regular investors will never even know happened. You might learn about a merger 3 months before it's announced, or get a heads up about a major contract that will boost a company's stock price. Technically, this is insider trading if you act on it, but the beauty is in the gray areas. Maybe you don't trade on the specific information, but it helps you understand market dynamics. Maybe you don't buy the stock directly, but you adjust your overall portfolio strategy. And even if you get caught, the fines are usually a fraction of what you made from the trade. Take the SAC Capital scandal. Stephen Cohen's hedge fund, which managed $14 billion at its peak, was basically a machine for insider trading. 8 former employees were convicted of insider trading between 2011 and 2014. The firm paid $1.8 billion in fines, one of the biggest criminal cases against a hedge fund ever. Cohen himself was never criminally charged, but he was banned from managing outside money for 2 years. Today, he runs Point72 Asset Management and owns the New York Mets. Option manipulation. Let's say you want Apple stock to go up. You buy a massive amount of call options, maybe $100 million worth. The market makers who sold you these options need to hedge their risk, so they buy Apple stock. This buying pressure pushes the price up. As the price rises, those market makers need to buy even more stock to maintain their hedge. It's a feedback loop that you triggered with your initial options purchase. You're essentially forcing other people to buy the stock for you. The crazy part is that you can achieve this with a relatively small amount of capital compared to buying the stock directly. You're using leverage and market mechanics to create artificial demand. When the stock hits your target price, you sell your options for a massive profit. Meanwhile, all those market makers who were forced to buy stock at higher prices are left holding the bag when the artificial demand evaporates. Tax-optimized selling, so you've got a stock position worth $500 million, but you want to diversify your portfolio. If you sell it normally, you'll owe capital gains taxes on the profit. But here's the billionaire hack. You donate the stock to your own foundation. You get to claim the full market value as a charitable deduction on your taxes. The foundation can then sell the stock without paying capital gains taxes because it's a nonprofit. And guess who controls the foundation? You do. So you've essentially sold your stock position, avoided all taxes, and maintained control over the money through your foundation. The best part is that everyone thinks you're being philanthropic. Look at that generous billionaire donating to charity. Meanwhile, you're laughing all the way to the bank because you found a way to sell your stocks tax-free. Look, I'm not here to tell you that this system is fair or ethical. It's not. But as long as you're playing the game, you might as well understand the rules, or in this case, how the rules don't apply to you. But if you ever become a billionaire yourself, well, now you know exactly how to join the club. Did you enjoy this breakdown? Well, like and hit that subscribe button for more.